Hello, and you're welcome to Global Business Insights, where we go deeper into the main business headlines from all over the world. First, on China, it's still at best a bumpy recovery, although retail sales was up 3.7% year on year in May from 2.3% in April, also better than the estimate of 3.0%. But China industrial production, we saw it up 5.6% year on year, below consensus of 6%. New home prices in China also were down 0.7% in May from the previous month, marking the 11th straight month-on-month decline and steepest drop since October 2014. Fixed asset investment also rose 4%, less than forecast of 4.2%. China's central bank also left its key policy rate unchanged today, also rolling over maturing medium-term loans. Big tech, and not the Federal Reserve, continues to act as a driver of the record-setting rally across US equities, offering hope to some investors that the stock market could shrug off concerns about the interest rate outlook to sustain that upward momentum we've been seeing of late. Last week, the Dow slipped minus 0.15% to close on Friday, while the S&P 500 inched down lower by 0.04%, and the Nasdaq Composite edged up just 0.12%, still closing at a record for the fifth session in a row. In Europe, French stocks suffered their worst week in almost 2 years as markets were rattled by the political uncertainty. South Africa bank stocks also saw a positive bump. That was on Friday as ANC struck an alliance with the pro-market DA party. But talking of Federal Reserve officials in the US, Minneapolis Fed President Neil Kashkari on Sunday said that it is a reasonable prediction that the central bank will wait until December to cut interest rates. He added that the Fed is in a very good position to wait for more data before taking any decisions. Cleveland Fed President Loretta Mester also noted on Friday that she would like to see good-looking inflation data, adding that the path towards the Fed's 2% goal may take longer than expected. That's the inflation goal. The big business story this week could be UK CPI, that's UK inflation for May, coming out on Wednesday, followed the next day by the Bank of England's Monetary Policy Committee decision. Will the Bank of England follow the example of the European Central Bank to cut rates, noting it's just 1 month to elections? Analysts see the BOE holding interest rates, however, at a 16-year high of 5.25% when the MPC meets on Thursday, but they will be watching for updates on forward guidance. Still on central banks, this time in Nigeria, the Deputy Governor Sani Abdullahi, in a presentation in March, had predicted inflation will start moderating in May, expected to come in at 33.04%, lower than in April. Well, that has not exactly happened. On Saturday, we got the inflation print for May at 33.95%, close to analyst expectations. Still, the central bank is expecting inflation to be peaking around about now. We replay the chat on the analysis of the inflation decision, and analysts in Nigeria also pointing out that it's not sufficient to aim to reduce inflation to the target 21.4%. The government also needs to focus fiscal measures to boost local productivity as well. Nigeria May 2024 headline inflation rate increased to 33.95% relative to the April 2024 print, which was 33.69%. On the contrary, on a month-on-month basis, the headline inflation rate for May was 2.14, which was 0.15% lower than the rate recorded in April 2024, which was 2.29%. The food inflation rate in May 2024 continued to creep up. It was 40.66% on a year-on-year basis, 15.84% higher than a year ago. May 2024, the urban inflation rate was 36.34%, while rural inflation in May came in at 31.82%. Business analyst Lekon Shote is here to share some of his thoughts on the latest data.
Just last year, the foreign exchange regime was reformed so that the naira finds its own level, which then means that market prices will reflect the depreciation of the naira. This is an import-oriented economy, and there's nothing we can do about that. Then, of course, you recall that also last year, as the president was making his inaugural speech on May 29 last year, he actually reminded us that fuel subsidy is gone. Okay, so removal of subsidy then means that market forces would probably likely be determining the cost of or the price of petroleum products, especially petrol, what is called PMS. And then it was not too long ago, less than 2 months now, the electricity sector also came with its own reform, with its removal of subsidy. Again, this will be reflected in the prices of all commodities. Every organization that uses energy will want to recover their costs, energy costs. So you shouldn't be surprised. And finally, another problem is that this hue and cry, this noise about new national minimum wage. As long as the media keeps hyping information about it, those who sell goods, they're also wary and aware. Those who also manufacture, they know that their costs of production is going to rise. And so they are already pushing what you might call anticipatory pricing into the market. And I think it's going to also get worse when the national minimum wage is finally settled. It means more money is coming to the economy with, if you like, an elastic supply regime, which is not very good. So it means that inflation is going to really increase. What to do? How to get out of this? Very easy. Difficult, but it's easy to identify. Those who are in charge of fiscal policies, those who are in charge of macroeconomic policies, all they need to do is very easy. First thing is those who are managing Nigeria's oil sector need to find a way to quickly raise the production of petroleum so that we can at least meet our OPEC quota, and then we can earn more foreign exchange. And then that should reduce the pressure on the naira. That's one. Number two is that the productive sector is not producing anything. As a matter of fact, a lot of companies are getting out of Nigeria. So those who run the economy have to be thinking very quickly of how to retain industries, manufacturers of consumer goods, fast-moving consumer goods that are already in Nigeria, and then developing homegrown manufacturers. The idea of thinking you invite foreigners or what you call foreign direct investors, when you have not quite tidied up, your economy, I think we need to. Security is a problem. Shortage of practically of even the energy is a problem. So we need to get those who run the economy to pay attention to those details. We need to start producing foods, at least the more strategic consumer products, which is foodstuff.
There are initiatives that could offer relief on price pressures as Nigeria considers the inflationary measures like suspending import duties on some food items, on drugs and other essential items for 6 months. on the other hand, signaled expectations that the minimum wage for workers are going up may also be fueling hiking of prices. The data is not all bad news, although a 28-year high at 33.95%, pretty much as expected for headline inflation and food inflation at 40.66%, making it about 10 years of double-digit inflation since December 2015, when inflation was 9.6%, easily the worst economic period in recent history. But the good news is that one, base effect could, or I should say should, drag the next set of annual inflation measures down. The base effect, just to explain, is a distortion that occurs as we compare inflation figures from a base a year ago, where we saw the first impacts of devaluation on inflation and a spike in month-on-month price increases. Other good news, S&P Stanbic PMI May release predicts they expect to see inflation begin to trend down after this reading. That's also confirmed by analysts at Trading Economics looking at their predictions. The grey shaded areas show that by June 2024, inflation should be 33.5%. By December, inflation should be down to 25%. Global Business Insight in January had predicted inflation would go to 23 to 25% by December. The central bank is targeting 21%. It's not too ambitious what the central bank is looking for. If we get inflation coming in the 21 to 25% range, that would be considered a lot of progress and builds credibility in a difficult transition requiring much structural adjustment that will have medium and longer term stability implications. That is on the positive side. Additionally, if you look at the chart showing the month-on-month inflation chart, we see month-on-month inflation coming down since February at 3.1%. That's what we had February 2024. Today it's 2.14. But we can also see a slowing descent in the tangent of the fall in month-on-month inflation, which suggests some stickiness. Predicting inflation is a hazardous venture. Even institutions with the most comprehensive analytics and forecasting models often acknowledge that they may just want to wait for the actual data to confirm the trajectory. But let's be clear, as plans to rebase GDP growth progress and may paint a better picture, actual economic activity and employment and consumption will be weighed down by inflation, especially if you don't see inflation coming down. In May 2018, PMI in Nigeria peaked at 59.1 points. That was May 2018, when inflation was 11.61%. The latest Stanbic IBTC Bank Nigeria PMI rose marginally to 52.1 in May. That's May 2024, up from 51.1 in the prior month. So we are seeing some resilience, but clearly you can't have improved or enhanced economic activity if inflation is ticking up. The confirmation of inflation peaking in May from the next few months readings is therefore important to understanding how the economic growth trajectory for 2024 is likely to be. The next inflation read is key to the central bank's July 22-23 MPC meeting, where there is a chance of a pause if we see the June reading showing a drop inflation, albeit a marginal one. Asian stocks were mixed as we saw Japanese equities down, leading losses in Asia, while Hong Kong stock markets edged higher. Just in, we got Japan's core machinery orders down 2.9% month-on-month in April, compared to a 3.1% decline expected, and also the first drop in 3 months. Asian markets were mostly softer as mixed Chinese economic news also underlined a bumpy recovery. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please continue to send your comments. Thank you very much for watching. Bye-bye.